Greetings from your investment advisor, Scott Campbell, with my quarterly market update for the fourth quarter of 2025. The bull market continued in U.S. stock or equity markets during the fourth quarter. Although equity markets experienced turbulence in November and December, snuffing out the traditional year-end Santa Claus rally, the U.S. stock market was up 2.36% for the fourth quarter and up over 17% for the year. That's spectacular. Anytime markets are up over 8%, we're doing phenomenal. The stunner in 2025 was the performance of foreign equity markets, which usually and still long-term underperform the U.S. Nonetheless, 2025 was a banner year for foreign equity markets. U.S. bond performance for the fourth quarter was mixed. Short-term bonds were up 1.16%, intermediate-term bonds up a shade less than 1%, and long-term bonds were flat. For the year, short-terms produced a very nice return of 5.35%. That's terrific performance for a very low-risk investment. Intermediate bonds were up 6.32% and long-term bonds up 6.62%. Also, very nice performance for conservative investments. In October, stock performance was driven by the Mag 7 and AI. But nervousness around AI created volatility in the markets in November-December. Nervousness surrounding AI comes from short-term traders who are concerned about stock valuations. That's the current value of a company's stock on a daily basis. They're concerned that at this moment in time, AI companies aren't making enough money. You, I, and everybody watching this are concerned about long-term stock valuations. We can all agree that AI is in its infancy, kind of like back when the internet was also in its infancy and some thought expectations were too high. They were clearly proven wrong, and the AI skeptics will also be proven wrong. A very welcome trend appeared toward the latter half of 2025 in equity markets and continued throughout the end of the year. Market gains broadened beyond the Mag 7 tech stocks. Small cap and value stocks produced above average returns. Another piece of evidence, asset allocation is the best strategy. That's the idea of diversifying your investment mix to include many types of investments. The economy continues to grow and at a faster pace than predicted earlier in the year. Preliminary data shows real GDP growth of approximately 3% annualized for the fourth quarter of 2025. That's down from the third quarter, but third quarter growth was record-setting. Interestingly, third quarter growth was initially calculated to be 3.3%. The actual growth rate for the quarter was 4.3%. We'll see what the actual growth rate is for the fourth quarter. The government shutdown has delayed the collection and processing of data. Energy. Energy costs play a vital role in the economy. The cost of gas factors into most areas of the economy. The cost of most products and services includes gas and oil. Consumers are tremendously affected by the cost of gas and oil. Lower energy prices provide relief to every consumer, especially those on the lower end of the income spectrum. 70% of our economy is based on consumer spending. So giving consumers more money is very good for the economy. Crude oil prices dropped 20% in 2025. Crude oil was trading at $75 a barrel at the beginning of the year, and on December 31st, it was down to $60 a barrel. And oil prices are anticipated to continue to drop due to a global glut. The U.S. takeover of Venezuela will possibly increase oil prices in the short term because of supply interruptions. That's not a certainty, it's just a guess. But longer term will definitely bring down oil prices as U.S. refiners benefit from the cheaper crude that comes from Venezuela. And that will reduce their reliance on Canadian, rail costs, and Middle East heavy grades. Inflation remains slightly higher than the Fed's target, but it's in check and shows signs of normalizing. Tariffs have not had the disastrous effect on inflation predicted by some. The White House has indicated increases in tariffs will be delayed to be sure inflation is kept in check. The labor market showed signs of weakness in hiring during the fourth quarter. The unemployment rate is historically low, but rose modestly in the fourth quarter, signaling a softening labor market. The Fed is expected to lower interest rates in 2026 this year, especially with the new chairman of the Federal Reserve expected later this month. Most experts expect the economy to continue to expand this year, and expectations for the stock market are also positive. Stay invested, reap the benefits. Please reach out if you have any questions or need any help. Thanks, and I hope to chat soon.